Welcome everybody to the 40 Finance channel. Today we're going to be talking about PayPal stock. This is one that just had their first earnings report of 2023, actually closed the books on 2022, and it's also a stock that I own. And my cost basis right now at 100 shares is $160. So I'm down big, but I'm still hanging on to PayPal as a potential rebound play, and just the fact that really I was in it for the long term from the start, and the recent term hasn't been very good. But this most recent earnings report has been good, and that's what I'm going to try to do here today. We're going to take that balanced view. We're going to talk about the bull case and the bear case for this stock. It's one that I know very, very well. And as always, we'll be using Seeking Alpha here for our data sources. And if you like what you see on the screen, you want to learn more about Seeking Alpha Premium, my affiliate link is in the description. Get a full year of Seeking Alpha Premium for $99, and that includes a 7-day free trial on the front end. So definitely check that out, potentially support the channel in the process. Now, one of the things that's really interesting here over these past couple of days is even though I'm about to show some of the bull case for PayPal, stock has continued to drip down. So you had the earnings call was February 9th. You had a quick bump up to 81.71, and now we're back to the mid-70s already. So the performance of the stock, in my opinion, certainly hasn't shown any of the good things that we got out of the most recent earnings report. Okay, so what was all this good news in the earnings report? Well, it boils down to strong guidance for the fiscal year of 2023, and basically came in far and above what a lot of people were expecting. So you see the company guides for adjusted EPS of 4.87, aka non-GAAP EPS, exceeding consensus estimate of 476. You know, that's that's 11 cents, which doesn't sound like a lot, but don't forget what kind of environment we're in, right? With recession fears, interest rates, you know the deal. That's what makes this a big story, in my opinion. PayPal guides for Q1 at, call it $1.10. That was higher than the $1.07 consensus, and it sees net revenue growth in Q1 of 7.5%. Taking a closer look at it here in the investor deck, non-GAAP EPS growth of 18%. That's up from the 15% growth they had anticipated in the past. And most of this comes from cost savings, right? Cost savings, higher interest income, and then they shifted a portion of annual incentive plans from cash back to stock. And so you're looking at, this operating margin that is improving, and that's what's important, particularly when there's a lot of fears in the marketplace right now, in the stock market. I'm happy to see that PayPal is, sharpening their pencil, so to speak, lowering expenses and boosting shareholder value. The other good news, at least from my perspective, is the share buyback program will continue. Approximately 75% of free cash flow going towards share repurchases. Not everybody likes share buyback programs. As a long-term stockholder, though, you probably do. And considering the uncertain environment that we're in, if you can afford to do it, it's one of the easiest ways to boost that EPS line and deliver shareholder value, which PayPal is finally starting to prioritize here. All right, the next thing that I'm going to put on the bull case here is Dan Schulman, the CEO, is leaving PayPal. He's going to retire. I think he's 65 years old. Under Dan's leadership, you transition from a company that was pretty much a eBay payment processor to where they are now. Unbelievable story, all right? Unbelievable story. But the sentiment for Dan Schulman and how much shareholder value he's delivered, there's a lot of controversy, or not really controversy, let's call it debate, right? There's a lot of debate on if he is the right guy for this next leg in PayPal's journey. You may remember last year, there was some activist investor who got involved in PayPal and currently sits on the board. And I think just at the end of the day, it's time to think about a transition. And luckily for PayPal, Schulman's going all the way through 2023. He also mentioned in the earnings call that he'll stick around as long as it takes to find the next guy and to transition everything. So for me, I think it's a good thing. At the end of the day, I think a jolt of energy will be good. And unfortunately for Dan, like the sentiment around his tenure, at least recently as CEO in the past few years, just been negative as far as how the street has received it. And sometimes a move like this, a guy just getting out of the way, can really boost a stock. So getting a transition here at the CEO position, I mean, it can be a little nerve-wracking, but I think at the end of the day, it's probably a good move for PayPal. It probably helps the stock in the long run. All right, now a couple things I found buried here in the investor call lead me to believe that they will probably exceed some of these early estimates that they've already put on the board. You look down here at this paragraph, and this is Schulman, and he says, we have identified an incremental $600 million of cost savings on top of the $1.3 billion previously identified. This includes the decision to reduce headcount by 7%. We will also continue to reduce our external vendor spend and real estate footprint. We now expect that non-transaction related OPEX for the full year will decline in the high single digits, driving approximately 125 basis points of margin expansion and 18% non-GAAP EPS growth. So here we are in February, and these pencils keep getting sharper for PayPal, and you gotta love it as a shareholder. Second point he makes is that we have designed our cost structure and EPS growth targets based on what we believe to be a very conservative planning assumption of mid-single-digit FXN revenue growth rate in order to give high confidence in our ability to deliver our EPS. So translation there, they obviously want to come out with guidance that they feel very good about, but they're also insinuating that it could be conservative. And then the third point here is our actual revenue expectations are well higher than that planning assumption. As you can see from our Q1 guide of 9% FX neutral growth with a Q1 non-GAAP EPS anticipated to grow by 23%. So that non-GAAP EPS growing 23 to 25%. In PayPal's case, they typically report in non-GAAP, and when investors look at it, they take the non-GAAP as the GAAP in this particular case, very similar to what you would see to NVIDIA, for example. All right, so that's the bull case to the PayPal forecast for 2023. What are some of the bears thinking about when it comes to PayPal? And I have to go back to the Schulman retirement, and that doesn't occur here in 2023. But it is important to note how complex of a structure PayPal is, and how finely regulated any sort of transaction business payment processor is. I mean, there's a ton of scrutiny on these companies, and that can be a problem in terms of experience that you're going to lose with Schulman. And he brings it up, I think, eloquently here. In a global business as complex as PayPal, there are important relationships with government officials and regulators across the world, and with the CEOs of our partners and the CEOs of our customers that will need to be thoughtfully transitioned. On the good news side, like I said earlier, he's going to be flexible in my time frame in order to assure we onboard the next ideal leader of PayPal, and I look forward to continuing to serve on the board. I think the fact that he stays on the board and you can always have special assistant roles and stuff like that is good, but there's a real risk to changing management whenever you are dealing with as much money as PayPal deals with. Okay, so some of the other holes that I see from a bearish viewpoint here, it's going to be the active accounts, right? And you're basically looking at the same thing that Netflix is dealing with, right? The bottom line is getting bigger. The net new additions are starting to get smaller. And to me, not all of this is a huge surprise, but for the market, anytime you're talking about subscribers, new accounts, whatever, it's just, they're so focused on it. The market is so focused on that part of every business, even though we all know that eventually your addressable market runs out of people. I'm not saying that's happening with PayPal, but it is going to be one of those black eyes that PayPal could have, because who really expects huge account growth in almost any business here in 2023? And you can see that they highlighted it. Net new accounts were 2.9 million in the quarter versus 2.9 million in the prior quarter. Total active accounts stand at 435 million, up only 1% quarter over quarter and only 2% year over year. So when you're riding this line of +1, +2%, obviously that can dip negative at really any point. And what that does is really screw up a good earnings report, because Wall Street will vulture down on those metrics regardless of how much profits you're printing. Then the other thing that caught my eye, Venmo processed 62.5 billion in total payment volume, up 3% year over year. That was down from 63 billion in Q3, but the bigger thing here is 3% year over year. It's just not going to cut it with Venmo, and I think it's safe to assume, with all the subsidies and COVID payments and stuff that went out in 2021, that you are going to see decline. But 3% from Venmo, I think, was a very obvious disappointment, and more work needs to be done there. On the bright side of that, and this goes for a lot of businesses, 2023 gives you the opportunity to comp numbers from 2022. And if my memory serves me right, there were no economic stimulus payments in 2022. Okay, so my forecast for PayPal in 2023, you can see our EPS estimates at 487. Everything that I'm reading, for good or for bad, I'm rounding this up to $5. Okay, your current forward P is at 16.30. This is pretty much historically low for PayPal. So I think that, worst case scenario, you go $5 for the EPS estimate, and you go 20 for the forward PE. That gives you a price of 100, right? I think 100 is give or take in the bag, assuming, news doesn't change significantly. And you're probably more likely in that 100 to 120 pace from where it stands today. Now, on the $120 side, you might be looking at January, February of next year, very similar to this time frame when they actually close the books on 2022 and present it to everybody. But I think that 100 to 120 is a pretty safe forecast for PayPal, and I personally like the way that this train is rolling. Now, if this downward slope in price continues, would I add more in PayPal? And I definitely would consider it, right? I would definitely pick up another 10 or 20 shares if we keep hanging in these 70s, because it just feels like free money, so to speak, before the end of the year. The conflict in my world is that I'm building up those QQQ positions. PayPal's in the QQQ. If PayPal goes up, then it builds up further in the QQQ. So I'm conflicted in that respect, but I still may add some shares just to lower my cost basis. All right, before you go, don't forget to check out that Seeking Alpha special offer down there in the comments. I hope everybody's doing well. We'll see you on the next video.